It's Cady Briggs, the Marketing Executive here at Integra Financial, and we're back again today to tell you about Buy for Uni Mortgages. If you have any comments, then please feel free to leave them below and subscribe to our channel for the latest content. So how do they work?
Okay, so Buy for Uni mortgages are very rare. There's not a vast array of lenders out there that do it. For obvious reasons, they're relatively high risk. So the way Buy for Uni works is that a student will typically look for rental accommodation, and rental accommodation prices are not cheap, especially when you don't have an income and you're reliant on the bank of mum and dad to fund your potential university education, accommodation and general living. So Buy for Uni allows both student and parent to purchase an asset for the student for them to live in. So with Buy for Uni, the student could purchase a property in their own name, even though there's no income, but on the premise that the rental income that they would get for renting a room to other individuals would then service that loan debt. So let's say, for example, I purchase a property in my name as a student. I get the first time buyer rights as a student for me to live in, and there are 3 or 4 other rooms in the property which are lettable, habitable rooms. I can then let those rooms out and earn a revenue from that. So the benefit being that the lender can hang their hat on the mortgage being affordable and sustainable. The student themselves have effectively free living accommodation to reduce their outgoings, and thus the parents reducing their potential outgoings. But also it creates an asset for that student in the future as well. So they could either continue to stay in the property after their university education is finished, or they could sell it, capitalise on any potential growth, and then use that for the next step of the ladder.
What deposit would you require to purchase a property on this basis?
Okay, so deposits with Buy for Uni schemes are very, very flexible. It's not the same all year round because it depends on things. Recent events such as COVID-19 and Brexit may have implications on this, but currently you can get away with even just putting down no deposit at all. So there are 100% schemes, because let's be fair, if a student's buying for a property with no income, it's highly unlikely they're going to have any deposits put down. And obviously with parents having invested in their child's education, they might have a limitation of cash flow as well. So there is 100% lending, 90% lending and 80% loan to value. So either no deposit, 10% or 20% deposit. Now, why do they do that? Because it hits different avenues for the client. So clients might be more cash affluent where they can put in more money, and then they would be rewarded with a more attractive rate of interest. So the less the deposit, the higher the interest rate. So it's not uncommon to see rates as high as 4.5% with no deposit, and maybe creeping down to low 3.5% with a larger deposit.
Does location matter?
Yes, location definitely matters with regards to Buy for Uni. For example, if we're based in Bristol in the south of the UK, you wouldn't be able to buy a property in Bristol if you're going to university in Loughborough, because it's not coherent with where you're studying. Now, a lot of mortgage lenders will put parameters in terms of what distance away from the university you must be in. That can be anything up to a 30-mile radius depending on location, but the criteria is set differently depending on the lender. Now, as I've raised already, there are not a vast number of lenders that offer Buy for Uni, so it's important to check the criteria in terms of where the property can be located and also the type of property that can be purchased to fall within the criteria for the lender as well.
How does the lender calculate affordability?
So lenders calculate affordability based on 2 models. One is kind of day-by-day stress testing to make sure that the rental income received can cover the mortgage payment based on potential growth in interest rates in the future, so much like they do with traditional mortgage lending. So let's say, for example, the lender offers you a rate of 4.5%. They might say, okay, we want to see that your income could cover that mortgage payment if rates were to rise to 6, 7, 8 or 9 or 10% plus. So that's number one. They may use a traditional income multiplier, which is looking at a certain amount times the income the property will generate. But in terms of the income itself is generated from the rent per room based on the number of bedrooms in that property to satisfy how much you can borrow.
What is the benefits for the applicants and the parents?
So there's a number of benefits really. I think the first benefits, which I've probably touched on in one of the earlier questions, Benefit is the client can get on the property ladder much earlier, potentially with little or no deposit, and they can use the room rent income to support it, so they don't have to worry about getting a part-time job or anything whilst they're in university, and they can put full focus on their educational needs. I think the other one is definitely the stamp duty. Obviously, as a first-time buyer, with changing conditions in the market, at present clients who are first-time buyers can obtain stamp duty allowance for free up to £300,000. Now, let's say, for example, the client were to buy a property with mum or dad or guardian or friend who already own a property. They would only get an allowance of up to £250,000 currently up until end of September 2021, but that £250,000 value is still charged at 3%. So there's a significant saving to be had from a stamp duty perspective as well.
Thank you for watching this video. We hope you got something out of it. If you have any more questions that we didn't answer, please feel free to leave a comment. And if you'd like to see our latest content, then please feel free to subscribe to our channel. If you'd like to contact us, then you can use our telephone number 0117 251 0083, or you can contact us via our inquiries email, inquiries@integraf.co.uk.